Welcome back to the London, Ontario Real Estate Podcast. My name is Phil Bailey. I'm a local real estate agent in London. And today I have a special guest on the podcast. His name is Stephen Green, and he is host of his own podcast called the Green Effect Podcast. He's also a local London mortgage broker. So someone that I get a lot of questions about right now is around mortgages. And obviously, I can't really talk about those in detail, so I bring on the experts to talk about them. So, Stephen, welcome to the London, Ontario Real Estate Podcast. Can you just tell us a little bit about yourself?
Yeah, for sure. Phil, thanks for having me on the show. It's been this is one of my first guest appearances on a podcast. So yeah, thanks for taking the risk, maybe is what some people will say. But so I'm a local mortgage agent and been doing this for over 25 years in finance and mortgages specifically for, 13, 14 years. You stop counting after a certain amount. So but I've been doing this a long time. Absolutely love it. It's been one heck of a journey, ups and downs and lefts and rights. And I had an absolute blast. So helped a lot of clients, first-time home buyers, investors, you name it, all sorts of stuff. Just like you said, you get questions on mortgages because of the craziness of the market, right? So but I've been doing it a long time and absolutely love it.
That's awesome. No, thanks so much for coming on the podcast. And I know you have your own podcast as well, so I thought it would be a cool idea to kind of get us together and talk about it and talk about the kind of things we're hearing and what we're talking about on our own podcast. So talking about, the kind of risk in the market right now, we're seeing a changing market, obviously, in the London area. So I'm getting a lot of questions. I'm sure you're getting a lot of questions about those pesky interest rates these days, Stephen. So, what are you hearing? I don't like to say that either of us have a crystal ball, but, any idea on kind of, what you're seeing currently and then also maybe where things are going with interest rates and what should people be aware of?
Yeah, I can almost hit play and rewind and play on me answering this question on a daily basis. It's and I always tell people, listen, my crystal ball is broken. Like, it's been broken for a long time now. So, it is a hot button topic. I think it's something we've never seen before. I say this as well. No one went to school for post-pandemic economics. Okay, so we are in unprecedented times. And, rates are up, down, left, and right. I think coming out of the pandemic where, the government, Bank of Canada, they panicked, right? They panicked. We didn't know how do we manage a pandemic in modern times, and so rates just plummeted, right? They keep the boat afloat. And coming out of that now, we the folks in charge created a monster, right? They created a monster, and now we're trying to figure out, how do we manage this, right? How do we figure out what to do with these mortgage rates that, yes, listen, 6-7% are absolutely historically kind of reasonable, to be honest with you. But we also are not used to having 6-7% where house prices are historically off the charts high. So 6-7% at, a $200,000 home is much different than 6-7% at an $800,000 home. So, I think what we're going to, I would say over the last 2 months has been interesting. We have very, very conflicting forces. We have a federal government that's spending like they've got an unlimited amount of money in the world. And we have a Bank of Canada who's still trying to figure out how to fix their miscues. And let's not kid ourselves. They had a lot of miscues where they're trying to raise rates. So we can't have a federal government spending nonstop money and a Bank of Canada not raising rates to try to slow them down. It's like those two are going head to head. So we've seen, of course, Bank of Canada raising rates, and I'm sure they're going to raise them again. I've been saying this for over a month. Everyone else is like, no, they're not going to raise rates. They can't raise rates. I'm like, yeah, they can, right? And so we're probably going to see another rate increase. But then the other side of it is, and we saw this with the last Bank of Canada rate increase, they raised their rate 0.25%. Well, the bond market, not sure what rock they've been living under, but they weren't expecting that. And so it was really creepy. Bank of Canada announced at 10 a.m. rates were going up. At 10:01, bond prices spiked. For those of you who don't know, that pretty much dictates the rates on fixed rate mortgages in Canada. That's where they get the money from. That price goes up, fixed rates go with it. So we have had a series of things that have happened that have just pushed rates to the point where us good Canadian credit loving people just keep floating the boat. As I've said before, if we're using up our savings and that runs out, we'll just start using unsecured credit. So it's been on an increase. It's been an interesting roller coaster, and roller coaster's not done yet. So.
Yeah, no, thanks so much for sharing that. Like, maybe give me an idea, because I think, the market has changed so much in terms of the London area market. To be honest, when I look at it and I see, some home prices, obviously, we've seen a drop in home prices if you look at it from across the board. I think what's interesting to me, though, is how it actually hasn't been that bad in some areas in terms of house prices. Like we're still able, and what I'm seeing at least is we're getting a bit of a squish that's happening at some of the lower price points. And, what's interesting is you mentioned the interest rates, going up 0.25%. And I think a lot of people are talking about that in the next rate hike, which will be pretty much right before we release this. So that'll be interesting. Yeah. What I'm curious about, though, is if someone comes to you and what are we talking about in terms of qualification? If someone has, the typical 5% down, what kind of numbers are they looking at in terms of getting into that market without maybe the bank and mom and dad getting involved? Or is that even a possibility anymore?
Yeah. And that's your observation around those lower price points becoming very competitive is exactly what's happening. And, it's been like this for the last 5-6 years. Incomes have not caught up to the price of housing. And when the price of housing over the last 3 years went exponentially high instead of the usual, 3-5-ish%, that's where the disconnect ideally had occurred. So, when we have a first-time home buyer coming to us, this isn't the Canadian dream, right? So they come to you or they come to me and they say, hey, we make household income of $120,000, right? And like a lot of us, we scrapped and we saved and we got 5% down and we got the closing costs to close on the house. And, you can be 120,000 with minimum down payment, and your max affordability on a purchase price is roughly, give or take a lot of factors, 400, 425-ish, right? So you're going to see the competitiveness at that lower price point. And you're also going to see, and we're going to see this in London, where people are going to continue to commute. So, not a day goes by, I see a client and, they're in Kitchener-Waterloo, they're in Cambridge, they're in Milton, right? They can't afford something in Milton. And they're like, well, how far is the drive to St. Thomas? Right? So you're going to see a lot of commuting. You're going to see a lot of people. We have a term, drive until you can buy, right? Drive until you can buy. And those days are coming back. We used to have that. I mean, how many times do people live an hour and a half away, right? And so that's where the affordability is being squeezed. And listen, I think it's a bigger picture issue around house prices. And I honestly don't think they're coming down. Like, sorry, guys, I don't see house prices coming down with the amount of immigration we have. It's just not going to happen. But we're going to see more and more of people, the starter home. The starter home concept is back. Get into something that's ain't pretty, doesn't smell real good, but you know what? Start building your equity, right? Pay your mortgage instead of somebody else. You were mentioning about the bank of mom and dad, and that's another part of the issue. If I can be as blunt as to say, the baby boomers are not dying fast enough. So the transfer of wealth is not happening. So how many times do we have a conversation with parents of, do you want to co-sign or do you want to give your son or daughter an early inheritance? Because that's what's going to happen. Otherwise, they're not leaving your basement. So how much is this worth to you? So we definitely see that where that transfer of wealth hasn't occurred naturally. I know it sounds a little morbid, but it is what it is, where it hasn't moved naturally. So we see parents getting involved, co-signing big down payments just to help them get into something. So yeah, affordability is tight for sure. What my job is really to figure out, okay, how can we make this work? Tell me about your whole family situation, and let me give some recommendations. So.
Yeah. So on that kind of topic, if someone comes to you and says, "Hey, I want to get a mortgage, I want to buy a house," what are your kind of first questions that you ask somebody? Because I know there's some people listening to this podcast that are first time home buyers, or someone that definitely hasn't bought for several years and maybe they forgot what their previous, mortgage broker asked them. So enlighten me on that a little bit, Stephen.
Yeah, it's a great question. And the first few things we look at, and the one thing I want to say to people is mortgage brokering it's about advice and trying to give the right information to people to make the best decision for them. I think that's the most paramount thing about our jobs. And I think sometimes people think, rate. What is the best rate? Rate. Well, I'm telling you right now, if I put you in the best rate, you're not going to like it very much. It's a horrible mortgage. So our job is really to provide the right advice. And to your question, talk to me about your employment. Tell me about your employment. Okay. Because gone are the days of people being just always salaried, right? The salary jobs are fewer and far between. People are hourly, they're self-employed. People have multiple sources of income to make ends meet, right? You're working part-time here, you're driving Uber, you're working part-time over there, right? So first question we always ask, what's your income? Because at the end of the day, bank wants to know how you're going to pay this thing back. All right. Savings is a big one. Tell me about your savings habits. Tell me what you do have saved up. Tell me about that. Right. Those are the biggest things. And I think once we get that started, then we can figure out what the next steps are. Right. Do we need to talk to mom and dad? Do we need to wait a little bit longer? The biggest thing for buyers on top of that, though, and this is really, really critical because Phil, I mean, you have kids, I have kids. They are not taught finance in school. They aren't taught mortgages, right? My best advice is make sure you know your credit score, your credit standing. Do not use a Borrowell, a Credit Karma, okay? All the banks offer free monitoring. Equifax now, because legally, they have to offer free credit monitoring. You can get it on equifax.ca, transunion.ca. Check your credit, understand your credit. Part of my advice is if we pull a bureau and we have a look at it, there's an issue with it, I'll give you the advice on how to fix it, right? So income, savings, and before you come, have a gander at your credit, and that's probably paramount, because how many people get an MBNA card at university, especially at Western. Here's an MBNA card because I got to get my MBNA card. I got a free football, and then you forget about the card, right? So it happens. But
well, yeah, like I've seen that. Like you put you get your free football, and then you go out to back in the day, you spend some money at the bar, and then you realize I got a $47 bill, but you never paid it off, and now you got some big credit issues. And it's interesting you say that about the education side, because I think that's a huge component that we're talking to clients about. Obviously, I'm not on the financial side, but even just the generalist real estate agent guy. And then you're talking the financial side. And what's interesting to me is that you're kind of making up for stuff that I wish people kind of had an idea about, right? In terms of credit, for example. So, one of the things I think, some of your best advice there is just, have a good idea. But also sometimes I think having that conversation and being like, hey, this is a situation I'm in. Maybe I'm not buying tomorrow, but maybe I'm buying in a year, right? But someone, like yourself that obviously has been doing this for, 25 plus years. I won't age you too much, but a long time can obviously, you can come to that person and and they can kind of say, hey, well, this is what you need to do, right? Because I think that the issues that I see is someone that really needs to buy or feels they really need to buy in the next, month, and then they have a credit issue and, they're in big trouble. Or maybe it's an employment issue and they're in a part-time job and they don't have enough tenure in that job to be able to use it. So there's a lot of stuff I think having a mortgage broker is important, because they're not just shopping around for you in terms of hey, this is the best product and maybe the best. And everyone talks to me about rate as well, and that's all I hear about. But when I was looking for my own mortgage, it's obviously I care about rate, but that's not the most important factor to me. I also make sure that I'm not handcuffed by this mortgage for the rest of my life, right? So it's interesting, yeah. Any point on that, Stephen?
Yeah, I was going to say, I always want to and you're probably the same way in your business, Phil. Like, listen, you got someone who's like, I'm thinking of buying, I'm not sure. I don't know about you, but I want to see them early on. If I can take 15, 20 minutes, half an hour on a Zoom call, a phone call, just to prep them, right? And if there's something glaringly obvious that there's a problem, be like, all right, here's half an hour of my time, go fix this. And here's how to fix it, right? And now all of a sudden it becomes a 6 month plan, right? And that's our job. Our job, we're here to provide a service. And at the end of the day, I want to see you get a house. So, if you got to go fit, if you have a collection, again, that old MB&A card, or you didn't pay your dentist because you honestly forgot. How many times we see collections from dentists, dental offices, right? Go fix it. Now you got a few months and you don't have to worry about it. Oh my God, I found my dream home and now I can't do it because I've done something I didn't intend to do. So, and probably the same for you around, prepping clients and trying to explain to them, all right, yeah, you want to buy something? What's your timeline? What's the market look like? I'll keep an eye out. Early,
Oh
like for
yeah.
me, early's better, right?
Yeah, I know. I've been really pushing that as part of, with my clients as well. Is like, let's just set up a meeting or coffee, a Zoom call, even a phone call, just because if we start just looking at a house and you say, hey, I want to go see 123 Main Street and it's out of your budget, you're just going to be disappointed with the rest of the process, right? And like, it's like we're trying to like put the toothpaste back in the tube after you've already seen that house. And I think that can be a huge issue. So yeah, for me, I always say to I have people reach out sometimes. I'm like, are you taking on new clients? And it's like, I'm taking on new clients every single day, but I'm also just taking on people that maybe they're not a client right this second, but they're, going to become one for both of us. I'm going to be able to help them do something and kind of guide them through that process. But hey, that process might take 2-3 years for someone sometimes, right? So
Absolutely.
I always say the same thing. Yeah, call me and email me, whatever, and we can set up a call. You're not wasting my time ever, because I'm also kind of a nerd and I like talking about this stuff, so that might be part of it too. I mean, you see me I was saying that like every time I go to a party I just talk about real estate. So, and it's like people are like, oh, I don't want to bug you. I'm like, no, I like legitimately like talking about this stuff. I think it's interesting, and I honestly learn stuff not just from mortgage brokers like yourself, but also just from the general, people that have no interest in this business and they just own a house and they've owned it for 37 years. And I want to know, hey, how did you buy that? How did that work? What were interest rates then? Right. So, continue the conversation kind of around the interest rates. I get this question a lot, so I just want to be able to send this clip to everyone that asks me. Basically,
so don't say anything stupid. Got it, Phil.
Yeah, don't say anything stupid right now. Yeah, make sure it's perfectly eloquent for me. Yeah. So there's a big discussion around. I always get this question. Even I've had this for years. Right? Is, do I go variable or fixed rate? What are you hearing about this? Can you share, the debate, either, maybe in the current context, but then also maybe just in general terms, like what should people be thinking about when they're thinking about that debate?
Yeah, great question. And so this is how I explain it to my clients, because the rate discussion has become so, what's the right word I'm looking for? Aggressive is not the right word, but it's just been such a big thing, right? And my first piece of advice to people is you can't turn back the clock. So I'm going to help you make a choice on the best rate decision now, and you're not going to look back because you made it based on what happened today, right? All those folks who did variable rate mortgages, okay, back in the day, I'm going to tell you right now, I had the same conversation with them, and I'm going to tell you in a second how I explain it to them. And they all chose variable for the right reasons at the time. We weren't expecting a 500 basis point increase. Okay, nobody was expecting that. If anyone said it was going to happen, they're full of it. Okay, so those folks made the right choice at the time, and I always tell my clients that. So how I explain rates right now is this: it's on a spectrum. One end of the spectrum, you can't see my hands there, but they're definitely moving. One end of the spectrum, you've got the 5-year, the 4-year fixed rates. Okay. They are our lowest rates right now on the fixed side. The banks, they're not too crazy. They're actually very excited about the longer term fixed stuff because that means you're going to be around for a little bit longer. Okay. But they're our lowest rates. But those 4 and 5-year fixed rates are only for our truly risk adverse clients. They think they don't want to deal with the ups and downs. They're like, lock me in, I'm good. Right. They don't want to deal with anything. The other market that's using that 5-year fixed right now are our default insured, less than 20% down, kind of our first time home buyers buying 5% down because they can't stomach or deal with volatility right now. They just can't. They're barely scraping it together right now. They can't deal with ups and downs. The 5 years probably for a lot of them is a good spot for them. On the opposite end is that variable rate mortgage. Okay. It could be the static one where your payments don't go up and down when prime changes, or the one that does go up and down. The only people taking those variables are two types of people. The ones that think the next 12 months rates are coming down. Okay, and that's a debate that we sometimes have on a call. And I'm like, all right, whatever you think, we're good. It's cool. But again, that's your choice, right? The other person that takes that variable, is the one that needs flexibility in their mortgage. So when you break a variable rate mortgage, it's 3 months interest and you're out. That's it. Fixed rate, they got to sell that debt on the open market. Could be 3 months interest, could be $40,000. Who knows? So those are the only type of people taking variable. And then in the middle, you've got your most popular term right now, barring those needs on the other side, okay? You got your 2, your 3-year fixed. That's the compromise, okay? As my wife says, we have to compromise sometimes, okay? So that's the compromise. You get a short term, so you can get out of this in a few years when we really, truly expect rates to come down a tangible amount, right? Because I always ask, what does coming down mean? Because if you think we're seeing 2% anytime soon, we're not, right? Like Phil, your grandkids and my grandkids might see 3% or 2%, maybe, okay, but not right now. So the 3-year kind of gives security of a fixed rate and a shorter term to get out of it. So variable versus fixed has become a three-headed, I don't want to say a monster, a three-headed conversation where you've got your variable on one end, your longer term for Canada, fixed on one end, the other end, and then you got your compromise in the middle, which is where a lot of people are ending up right now. So at the end of the day, like I said, make a choice, right? Don't look back because you drive yourself insane. But at the end of the day, it comes down to what is important and what is the need for the client. It's not a cookie cutter yes or no. And that's the important part here.
No, thank you for sharing that. One kind of clarification on there that I always get from clients as well is these variable rate mortgages. You kind of explained there's kind of, two main types of variable rate mortgages. Can you tell us a little bit about that? Because I'm just kind of curious on, the situation of someone right now where, hey, their payment might not have changed, but, what happens in that case at the end of their mortgage? Are they going to be in, I never actually paid off my mortgage at all? Like, what kind of situation could they face with that?
Yeah, and this is something that is going to come to a head in the next year or two, or maybe 3. So there's 2 types of variable rate mortgages. One is a truly an adjustable rate. So if the prime rate changes, your payment changes immediately to reflect the increase or decrease in the prime rate. Okay, so in the broker channel, Scotia has the adjustable rate, and most of what we refer to as the monoline lenders, who are lenders that just do mortgages. Okay, so they primarily have adjustable rate mortgages. Those, before I explain the static payment, those folks, they're having the immediate impact to prime rate changes. Okay, when we get calls from people who are struggling, they're Scotia clients or they're monoline clients, and that's not a reflection on the bank. It's just the product that they have, right? So it is what it is. I'm not slamming any banks. It's the product. So those are the folks that are getting the immediate pain, right, of those changes or the increase to prime rate. The other type of variable rate is truly a variable mortgage with what we call a static payment. So what that means is if prime goes up or down, your payment will stay the same, but the amount towards principal and interest changes. Genius idea. Great product. Every bank except Scotia offers it, but it wasn't designed for a 500 basis point increase. It was designed for quarter here, quarter there, maybe 0.5%. No big deal. That's what it was truly designed for, not for what has occurred. So 2 things with this static payment. First of all, we have people, CIBC I think is the most exposed right now based on what I'm reading. You have people right now, because their payment is now basically 100% interest. They're not paying their mortgage down anymore. Well, guess what? Their amortization has to extend. So now we got people with amortizations of 70, 80, 90 years, right? So, that's a very, very big problem. It's big time in the news because one of our governing bodies, OSFI, Office of the Superintendent of Financial Institutions, is all up on this. And they're like, whoa, get this under control. But the other part of this, the big impact, if I have a variable rate mortgage and my payment hasn't changed, I'm going to have to ride this out, or I maybe can't sell because my payment is still low and I'll just see what happens. So when we see limited inventory, part of it is people can't sell. They're stuck. Because think about it. If I do really need to move, well, my new payment's going to be reflective at the higher payment. So I'm just going to wait it out, right? And see what happens. So anyway, I digressed a little bit there, but the static payment and the adjustable rate variable is the two types. And believe me, they have both had very significant impacts in different ways on the current market right now.
Interesting. Yeah. And then they talk about a trigger rate too, all the time. Can you just, sorry, I threw that one at you, but I'm kind of curious on tell me about the trigger rate. Like, cause I just hear these things myself and, I'm like the generalist in the real estate transaction. So I know a little, I know a little bit, a lot, and you kind of are very much more specific. So, I'm curious about that as well, Stephen.
Yeah. So the trigger rate, and I'll be honest with you, all the years of me doing this, and anyone else who says they explain this to a client is also kind of full of it as well. Explaining the trigger rate to the client was rare because, again, we've never seen what we've just gone through. And so what a trigger rate is, when the prime rate increases to the point where your payment becomes 100% interest on a static variable, okay, so not Scotia, not our monolines, you hit what we call a trigger rate. And the second this rate is triggered, okay, you're 100% interest, and the bank can, I don't want to use the term arbitrary, there's different formulas. Believe me, the banks are trying to learn what to do here as well, okay? So it's not, there's no, again, we don't have a script, man. We're making this up as we go in some cases. So once it hits that rate, they can, I use the term arbitrary, but they can increase your payment to try to get it to the point where you're at least either still paying your interest or you're paying a percentage of the principal. So trigger rate became a term that no one really ever talked about, but now it's a thing where a lot of people have hit this rate. And so, again, it's still, the banks are still trying to figure out what to do with this, right? And I remember when the first bunch hit the trigger rate, I was calling friends, peers, banks, my broker partners, and I'm like, hey, what are you hearing? What's going on? What's RBC going to do? Or what's CIBC going to do? Or what did you hear from TD? Nobody knew, right? So that's the trigger rate. That has now become a thing that people now monitor as well. And it's something it's something that we've never had to deal with, but it's a new one for us. So.
Yeah. And I think that's, again, I kind of go back to that, like the education of this is been an interesting one, I think, for us, talking about our clients, for me, just about, the general market and, what this house sold for and what this house sold for. And now you're learning, terms that it would never have ever happened ever, but then it happened, right? So it's kind of like an interesting, I think, situation that we find ourselves in. But, the other side of this coin, and, I think what I see is when they left interest rates even the same around, I think it was April, it was around Easter, believe, right? Maybe, yeah, I think it was
March, April, yeah.
March, April. The market in London, at least at like certain price points, just went bananas again. And I was like in multiple offers. There was firm offers. I'm talking like 10, 15 offers on homes again. And what's interesting about that is that was just like the sentiment of the market potentially, being like, well, we're changing, right? And so what I see is there's such a huge amount of pent up demand for real estate in London. Yeah, I'm biased. I'm a real estate agent. I get that, right? I also own a house, right? Like it's one of those things where I'm like, obviously I bought into this, right? But what's interesting to me is, that was just keeping the interest rate the same. That had nothing to do with lowering it or even maybe a push to lower it in the future. All that was, hey, we're just going to leave it the same this one time. And what happened? The market went bananas, right? Especially I think at that under maybe $700,000 price point at the time. Now I'm seeing a lot build like under 600,000, even under 500,000 if you can find that, which is, it doesn't exist. But what I kind of go back to is like, the market used to be when, before the pandemic craziness, right? I could get a detached house for like, some of them, I know they weren't nice, but like $250,000. Like there was a 2 in front of that number.
Yeah.
During the pandemic, I remember I saw a lot of houses over that, year. I still see a lot of houses, but we're talking like 500,000 is kind of, and I remember seeing those houses and like, the floors were wonky. It was like, some very starter homes, which I'd see. Those homes now, I'd see them maybe more at like a $400,000 price point, maybe like even a 425, right? So you're still significantly higher than when we started this whole exercise with a payment that's significantly higher, right? So, I see the kind of the positive side of this whole thing is, what happens when interest rates do eventually, start trending downward. Well, even when they kept the same, they went crazy. So when they start trending downward, then, the market's there. I just see like there's such a pent up demand for London, Ontario real estate. And I think a lot of it is, the GTA. Yeah, there's lots of people moving into the country. But there's also, things like family size. Family size is a lot lower than it used to be, right? If you have 1 or 2 people in a house, that's probably, I have a lot of clients that I have a client, right? Where before it was like, 2 people plus maybe a couple kids or a few kids, right? So it's like, I just think, that side of it is interesting to me, but I just think that's my tangent of the podcast, but it's interesting to kind of see like how this is impacting stuff, and market is still, buoyant, right? And it's still kind of going up versus like before this pandemic. If you just take, the pandemic out of this equation, the market is, potentially, that's a ridiculous kind of increase in terms of percentage wise. So, interesting though.
Yeah. I think we're going to see, listen, I already said this on the podcast. I don't see house prices dropping anymore. I think we've already gone through our crash. I really do. And I think we're not going to, my guess is, and it's a guess because remember my crystal ball is like garbage, but I don't think we're coming out. We have way too much immigration. And I want to be clear on what I'm about to say. I'm not trying to say we shut off immigration. I think what we really need is we need immigration with a fantastic housing policy. Like, let's call it what it is, right? Like, we need immigration badly. We have to, right? We are dying quicker than we are being born here in Canada. We need more immigration. But I can't imagine being someone new coming to Canada for the Canadian dream and they're living on the streets and eating out of a food bank because we don't have a housing policy to go with it. And I think we're going to see more and more of families living together, right? Half my clients who are trying to buy their first house, they want an in-law suite. They want to bring mom and dad with them. They need an extra source of income to try to make it work, right? So I just, once I think it starts to, we are a country of hope, Phil. We love hope. Give me hope and we love everybody, right? And what happened in March, April is very simple. We all got hope. All right, let's get this thing going, man. How busy was July? Because those were the 4-month rate holds that were coming up, right? Because rates then spiked, right? So the second we get hope, to your point, bud, I think it's just going to ramp up. And I think Tiff Macklem at Bank of Canada is very aware of that. Very aware. So we'll see.
Yeah. Well, I know the Liberal policy like slogan last time around, or maybe the first time that Justin Trudeau ran, was "Hope and Hard Work." So I thought that was a slogan. So I mean, maybe we can get things in order here. But yeah, I'm not overly confident. Not to get political, but yeah, I'm not overly confident with.
That's another podcast, man.
Yeah, and it's like I mean, I'm like, okay, so we should tighten our belt, but we're going to spend a ridiculous amount of money. Seems interesting to me, but at the same time, I'm like, I still see people lining up for those Taylor Swift tickets, right? And like I see people, buying the new, the BMW instead of like the, Ford Focus. So it's like, it's interesting to me just to kind of see like the whole change, but it's like, I think, it could be an interesting kind of market to see kind of where things go over the next little while, especially if, they can get kind of some things under control. So,
yeah, fingers crossed.
Yeah, so a couple just, I know I'm going to my tangent as well, Stephen, but, one question I did want to ask you is because I know you have a lot of experience kind of with investors as well. Over the years, I've definitely worked with investors before and, been kind of in that space myself. But, I'm kind of curious on like these interest rates, but then there's also this rent thing going on where the rents seem to be up astronomically as well. And I'm talking like just in, the London area. Yeah. What kind of issues are you seeing right now with investors when it comes, to being a mortgage broker? And like, are you seeing some investments work better than others in terms of what your investors are kind of doing or maybe even thinking about in the future right now in London?
Investors right now, this is the most exciting time for investors, and let me explain why. Yeah, we got the higher rates, got the higher prices, whatever. But over all these years, this is the best time to look at an investment property because, and as a mortgage broker that works with investors, I'm always a glass half empty guy. Okay, I don't want the best market rent you think you're going to get, I want the worst case scenario. And so nowadays with investors, they've got to really do the math. Okay, they've got to work out vacancy, bad debt, lower rental incomes in case of vacancy. Like there's a lot of, this is truly a time, if you're an investor, you're going to learn how to properly invest in real estate. And what we see a lot of is, can we make this property into a 2-unit? Can we convert the basement? Okay, that's what our best investors are doing. Okay, what is the potential to make a 3rd unit? Can we put in a garden suite? Can we do this? Can we do that? Right now, it's truly thinking and really looking at the numbers, because we've just come off a time, and I affectionately call it the HGTV generation. Okay, where everybody makes money on real estate, man. You could make the worst choice ever. Don't worry about it. It went up 10%, sell it the next year and you're good, right? No harm, no foul. So we've gone from investment properties being like trading cards, right? Or trading stocks, really. Sell it, buy it, whatever, who cares, to now with our investors, we got to do some numbers. Like we really have to have some tough conversations. Do you have, as an example, fallback if one of your tenants doesn't pay for a month or two? Are we okay there, right? These are the things that we have to, because you said rents are going up. Absolutely. Do you think everyone's income is going up at the same time to support the higher rents? Heck no, right? I mean, you got $10 oranges, for crying out loud. So we got a budget for this, right? Can you do it? And are you okay going with plan B? So that's what we see for investors right now. Is there multiple streams of income on the respective property to be able to float it if need be? We see a lot of popularity with 3s and 4s. Listen, in London, we've got tons of student rentals. Okay. And I'm hearing student rental rooms are going for $1,200 a pop. Right. So we're hearing, I mean, and it's insane. Like, thank God my kids are done college and well, they're still in there, but they're commuting, thank goodness. But that's what we're seeing now. And that's just a supply and demand issue. Right? It is what it is. So I think multiple streams is key.
Yeah, I agree. Like I'm seeing a lot of that where like breaking up a house and putting in, another basement suite, and I've had some clients, do that. And obviously, you're taking, something and putting into smaller parts and then selling those parts off. I mean, that's kind of how a lot of businesses make money, right? But I agree with you. There's some times where people say, and I've heard these stories of, I'm a genius, right? Like, oh, my investment, I bought this and it went up $200,000 and okay, you got extremely lucky.
That's right.
Right? And, it's cool to hear that, right? Or the person, I bought this house for $32,000 in, 1960. It's like, okay, cool. But why didn't you buy 3, right? Like, why, you know what I mean? And it's kind of a situation where it's, I think it's interesting to me how something like a student rental, and this is where I started, right? That's what I owned. That's my first house I ever owned, right? And lived in it literally like it was crazy land, right? And I didn't know anything. But to me, we're talking $300 a room or something, right? And now we're talking like, I saw one literally the other day, some friend of mine sent it to me, and I think it was $1,200 for a room. Yeah. And yeah, I might have, I maybe had an ensuite or something. But I was just like, come on, like that's like what I remember paying, for 1-bedroom or even 2-bedroom apartments, less money than that, right? So, yeah, I think if I was talking to an investor, I might say, if you want to make the most like return on your investment, yeah, maybe look at student rentals. But if you want to live outside of London and own a student rental and not drive back every single few days to deal with your student rental, hey, maybe you buy a house, you maybe convert one to in Wortley Village or something, you rent to a couple young professionals that might be there for a few years before they can maybe eventually buy a house, and now you might have someone that isn't as potential demanding or maybe as tough. But I've seen student rentals work really well too, so it's like, it's not a stereotypical thing. It's just, to me, it's like I've seen some work extremely well because they know what they're doing, and they're there's one kind of story I've heard recently where you're not just adding all the students to the lease, you're also adding all the parents, and I don't know, I'm not going to get into landlord tenant law around these things, but
another
you're definitely
3-hour podcast. Yes,
yeah, you're definitely and I honestly am not the guy for that wants to even I hate those stories, but I think the one side is protecting themselves, and the other side is trying their best to do that, right? And so it's interesting to me. But then, yeah, I know some investors that have been in situations where the tenants just stop paying rent, and then we're in a tough situation right now in London. But then I've seen some bad actor landlords as well, right? So I'm as balanced as I can be, I think, around that one. So, Stephen, this brings us to the end of the podcast, but there's one question I always like to ask on the podcast. This is probably the most important question we're going to go over today, and that is,
I'm ready.
What are your top 3 cool places to visit in London? And these don't need to be, a ranked order, but they can be. I love asking this question. So this is from, a London mortgage broker perspective. I want to know, where are all the mortgage brokers and the cool guys with podcasts hanging out in London, Stephen?
All right, so, and I already told you when we were prepping for this, I already told you, you sent me a bunch of questions about the market and rates and all that crap, right? I didn't spend a lot of time. I spent most of my time on the top 3, okay? So this
Good. Priorities are in check.
Totally. I researched, vetted, charts, graphs, but I'm telling you, this is ironclad, okay? So I'm going to go 3-1, all right? Now, the first one, understand I'm originally a Toronto boy. Okay, so you got to make sure you understand that. And these particular stores are few and far between, okay? But I'm telling you, and I'm like, this is not a great kind of local thing, but my first 2 are, but whatever. I'm telling you, I don't know what it is. Great Canadian Bagel is freaking amazing, okay? I don't know what it is. I go in there, and I'm like, I want that bagel with all the stuff on top. And it's funny, you get the warning, right? The lady's like, are you sure? It's like $3. I'm like, dude, I don't care. I go down the thing, and she's like, what do you want on it? I said, I want this cream cheese. She's like, oh, that's an extra $1. I'm like, I don't care. Put it on there, right? So by the time I'm done, I've got like an $18 bagel, but I don't care. It's so good. So anyway, there's so few and far between. I just, because I travel quite a bit, and I'm like, man, I gotta get in on that. So, all right, so that's number 3. Number 2 is, and I had to look it up to make sure I had the right pronunciation, because when someone introduced this to me, I'm like, seriously, is this a thing? It is. Chung Chun. Right, you know what I'm talking about here? All right.
I know the name, but honestly, I don't know.
Oh, okay.
This might be new to me, Stephen.
All right. So, hey, listen, I hang out with a particular breed of people, okay? And if they're listening to this podcast, they know who I'm talking about, okay? They're going to know. So, Chun, CHUNGCHUN, okay? They do corn dogs, but we're not talking like pogos, okay? You see where I'm going? So, they do like poutine ones and cheese and bacon and, okay, like, I know you look at me and like, oh, Steven, spring chicken, good-looking, fit guy, okay? I can only eat one of those. That's it. I can't eat more than one. One, that's it. No more. We're done. So try a corn dog from these guys. I'm telling you, start with one. Don't go, I can eat 5 of those. No. One, okay? Top of the list, and maybe this is my Italian heritage. I don't know, okay? But Soprano's Pizza, oh my God. Okay, like we're somewhere between like Domino's and like a true Chicago deep dish. Like you look at it from the side, and you're like, damn, how'd they get all that on there? Again, one maybe two slices if I'm not eating dinner. Like it's like that sort of thing. It's just so good, and I don't know if it's the name that I'm attracted to or I don't know, man. But it's yeah. So corn dogs and pizza all around, and then chase it with a bagel in the morning. There you go.
Oh,
that's a day in London.
Well, I know what I'm doing after this. I got 3 places to visit, and I might pass out after that. So that's a great list, Stephen. Thank you so much for coming on the podcast. This was actually a great conversation about all of the, mortgage rate stuff, the market, investors, and then of course, corn dogs, because that's obviously this is the part of the podcast where we got to talk about London on the London, Ontario Real Estate Podcast. So, Stephen, how can people get a hold of you? I will put, your website in the show notes, but I'm curious on, what's the best way to get a hold of you if they have mortgage questions?
Yeah, on the topic of being a bit of a tech nerd, if you go to lendmemoney.ca. I know, right? I got a whole bunch, bud. Let me tell you. Lendmemoney.ca will bring you right to my website. You can track me down. You can shameless plug. You listen to the podcast. Do whatever you got to do. Calculators, everything you want to do, but didn't want to ask. It's all in there. So lendmemoney.ca.
Awesome. Perfect. And yeah, again, I always say this on the podcast. If you ever have real estate questions, you can always contact me. My name's Phil Bailey. I'm a realtor in London with the House Sigma team in London. My number, you can just text me, 226-977-2348, or I have a website as well. It's just philbailey.ca. Thank you so much, Stephen, for joining the podcast. I will definitely be putting all the info in the show notes, and I hope everyone has an awesome day in London, Ontario. Take care.